legends of the crypto world. I'm Sash from CRYPTOLOGIC, coming at you live from the electric streets of Melbourne with the aroma of fresh, flat whites mixes with the buzz of blockchain innovation. Today is October 23rd, 2025, and we're diving headfirst into the worldwide of Bitcoin and cryptocurrency updates that are shaking things up right here in Australia and across the planet. From Bitcoin holding strong at around 166,000 amid some market jitters, to Australia's latest regulatory moves that could redefine how we trade and protect our digital assets, and global breakthroughs like stablecoins stealing the spotlight from BTC itself, we've got it all covered in this jam-packed episode. I didn't just wake up one day and decide to chat about crypto. I immersed myself because I truly believe in its power to transform lives. Bitcoin isn't merely a digital asset, it's a rebellion against outdated financial systems. Picture this: a decentralized network where you, the individual, control your wealth without banks or governments pulling the strings. It's about financial sovereignty, breaking down barriers for the unbanked and creating opportunities in places where traditional finance has failed. In Australia, where housing affordability is a nightmare for many, crypto offers an alternative path to building wealth. Globally, it's revolutionizing remittances, supply chains, and even art through NFTs. The potential is endless, from tokenizing real estate to powering AI-driven trading. If you're new here or a seasoned hodler, this episode will arm you with insights to navigate this dynamic landscape. We're talking real-world impacts, not just hype. So grab your coffee, settle in, and let's unpack the transformative magic of Bitcoin and crypto together. Trust me, by the end, you'll see why this isn't just an investment, it's a future of money. Now, before we jump into the nitty-gritty, I want to share a quick personal story to set the tone. Back in 2017, when Bitcoin was hovering around $5,000 Australian, I took my first plunge. It wasn't easy. Friends thought I was nuts. But watching it evolve into a global force has been life-changing. That's the enthusiasm I bring every day. Belief in blockchain's ability to democratize finance, foster innovation, and empower communities. Whether it's Australia's push for safer regs or the world's shift to on-chain economies, crypto is here to stay and thrive. Alright, enough from me. Let's kick things off with some fun. Okay, crypto fan, you know we can't start without injecting a bit of humor into this volatile world. Here's a fresh one I whipped up. Why did Bitcoin miner break up with his girlfriend who loved Ethereum? Because she kept complaining about his proof of work ethic, but he knew she was just gassy from all those high fees. But doom. Alright, if that didn't crack you up, maybe this variation will. Imagine Bitcoin saying to Ethereum, "You're too layered for me. I prefer my blocks simple and secure." Come on, that's gold in a crypto comedy mind. If you've got a better one, whether it's about Solana's speed or Dogecoin's memes, drop it in the comments below. The best joke gets a personal shout out in tomorrow's video. Let's make this community laugh together. Now, with smiles on our faces, let's shift gears to what's happening right here in the land of Oz. Alright, let's ground this in our backyard because the crypto landscape in Australia is evolving faster than a kangaroo on a caffeine high. We'll break this down into key areas: regulatory updates, adoption trends, scam concerns, and local market vibes. Starting with the big regulatory news that's got everyone buzzing, from the Treasury's draft laws to potential ATM crackdowns. First up, the Treasury Laws Amendment Bill is making waves. This proposed legislation aims to require platforms handling Bitcoin, NFTs, stablecoins, and other digital assets to hold an Australian Financial Services Licence, or you might know it as AFSL. Penalties for non-compliance, a whopping up to 16.5 million Australian dollars, or even jail time for serious breaches. Why now? Well, according to the recent reports from Austrac and ASIC, over 3.3 billion Australian dollars was lost globally to crypto hacks and scams in 2025 alone, with a significant chunk affecting Aussies. Here in Melbourne, where tech hubs are thriving, this could mean safer trading environments but higher barriers for new entrants. For instance, small exchanges might need to merge or up their game to meet compliance, potentially leading to a more consolidated but trustworthy market. But it's not all smooth sailing. A fresh survey from SwiftX, one of Australia's leading exchanges, reveals that crypto adoption has stalled at around 32% of the population, up only slightly from 28% last year. Despite 95% of Aussies now knowing at least one cryptocurrency and 75% of holders favouring Bitcoin, trust has dipped to about 60%, down from higher levels pre-2025 volatility. The Labor government's push for clearer regs, including stablecoin frameworks and exchange licensing, was meant to boost confidence, but uncertainty lingers. As Decrypt reported, investors under 35 are profiting big, averaging $9,958 in gains, but older demographics over 50 are lagging at just 6% adoption. Parents are stepping in it too, with 39% owning crypto, often to teach their kids about finance. Now let's talk scams and the hot button issue of crypto ATMs. The government is flagging a fresh crackdown, potentially banning or heavily restricting these machines under the new Austrac powers. Why? Data shows Aussies lost millions through ATM-linked frauds last year alone. 3 million Australian dollars in just 12 months per ABC News. High-value transactions are often tied to scams or money laundering to high-risk jurisdictions. Imagine popping into a convenience store in Sydney to buy Bitcoin, only for it to be a vector for exploitation. Austrac's proposal aims to curb this, associating most suspicious activities with elder abuse or investment cons. This could reshape how casual users access crypto, pushing more towards licensed apps like SwiftX or, my favourite, CoinSpot. On the brighter side, technological innovations are bubbling up. Macquarie Bank's latest analysis suggests Bitcoin could see a peak around this October period, aligning with our current price stability at 166,000 Australian dollars, down a touch from last week's highs, but up massively year to date. Adoption metrics show 400 registered exchanges in Australia, but only 40 are fully licensed per ASIC's warnings. Gen Z and millennials are feeling the FOMO hard. 40% regret not buying Bitcoin back when it was $400 a decade ago, especially with house prices in Melbourne and Sydney averaging over $1 million Australian, locking many out of the property market. Crypto's seen as the equalizer, with historical returns like Bitcoin's 31,400% surge proving its hedge potential against inflation and fiat devaluation. Wrapping up the local segment, we've got institutional moves too. IG Group's recent 108 million acquisition converted from $72 million of a majority stake in Independent Reserve is a vote of confidence in Aussie crypto infrastructure. It's strengthening our position in the Asia Pacific, potentially attracting more foreign investment. But challenges remain. With scam targeting vulnerable groups, consumer protection is key. What's your take, viewers? Are these regs a step forward or a hurdle? Share in the comments. I love hearing from you all. This local scene sets the stage for how global trends ripple down under. Now, let's expand our horizons to the global stage where crypto is firing on all cylinders. We'll cover price movements, ETF developments, stablecoin dominance, technological shifts, and emerging risks like quantum computing. Bitcoin's global price is hovering around 166,000 Australian dollars, equivalent to about 108 US dollars, down 1% in the last 24 hours, but showing resilience with a 200-day simple moving average climbing towards $169,000 by late November per CoinCodex predictions. Why the slight dip? Gold's recent 5% tumble, its worst in years, has investors pivoting to Bitcoin as the ultimate safe haven, as noted by Bitwise's CIO. This structural breakout could unfold once selling pressure eases, mirroring gold's historic runs. ETFs are the superstar here. Last week saw record inflows of 9 billion Australian dollars, that's US 5.95 billion, into Bitcoin's ETFs, propelling Bitcoin to an all-time highs of 193,000 Australian dollars or 126,223 American dollars earlier this month. On the flip side, challenges abound. Bitcoin miners' debt has exploded from 3.2 billion to 19.5 billion Australian dollars in a year, per VanEck, as they chase AI integrations and rig upgrades. A massive whale just opened a $360 million Australian dollars short position after profiting $307 million from recent dips. Volatility is real, folks. Political angles too, like US Senate Democrats are scrutinizing Trump's crypto envoy over holdings, while Trump's LIDAR reg promises fuel optimism. CoinDesk notes US money markets at 11.4 trillion Australian dollars could flood into crypto if Fed rates drop further. Emerging tech risks. Google's quantum breakthrough has rekindled fears, with Bitcoin, XRP, Sol, and ADA holding flat as markets digest potential threats to encryption. But upgrades like post-quantum cryptography are in the works. Other highlights: T. Rowe Price filing for an active crypto ETF, Coinbase's AI crypto wallet protocol for autonomous trades, and the UK's FCA suing HDX for unlawful promotions. It's a tapestry of innovation and caution, prices feeding adoption, partnerships like A16Z's boosting utility, and over 19,000 cryptos in play, with 3.7 million dead since 2020-21. Global feedback loops are intensifying, with Bitcoin's 21 million cap scarcity driving FOMO. Stay tuned as we analyze what this means next. Time to go beyond headlines and dissect the implications locally, globally, and for your crypto strategy. We'll explore regulatory impacts, market risks, opportunities, and long-term forecasts in detail. Starting locally, Australia's AFSL mandates and ATM crackdowns could be game changers. By weeding out unlicensed operators, trust might rebound from 60%, drawing institutional players like IG Group deeper into the market. But compliance costs could hit small Melbourne startups hard, leading to mergers and fewer options. Think a shift from 400 exchanges to a core 100 licensed ones. For consumers, it's a win against scams, with Australian dollars millions lost annually, especially to elders. These rules act as shields. However, Stalled adoption 32% amid trust dips means slower growth. SwiftX predicts 1.6 million new users post-regs, but only if clarity arrives soon. Tie this to Gen Z regrets. Missing Bitcoin at $400 equates to foregone millions today. In a housing crisis, crypto's volatility offers high reward hedges, but regs could stabilize it as a portfolio staple. Globally, ETFs and stablecoins signal maturity. Hong Kong's Solana ETF could boost SOL to $300 plus, pulling alts like Chainlink and Dogecoin into rallies via increased liquidity. Bitcoin's scarcity nearing 20 million mined amplifies this. A16Z's on-chain shift means real utility, from DeFi to AI payments. But risks loom. That $360 million whale short could cascade to 154,000 support if 164,000 cracks. Miners 19.5 billion debt. It pressures margins, potentially spiking fees or forcing sales during dips. Quantum fears from Google. Short term, FUD, but long term, it accelerates quantum resisting upgrades, strengthening networks. Market-wide implications, volatility persists. With BTC's low vol, post-liquidations hinting at consolidation before breakouts. Optimists like Euronews eye 200,000 or 245,000 by year-end under deregulation. For Aussies, global inflows 9 billion weekly could lift local prices, but US-China trade tensions or Fed moves add uncertainty. Downside. Over-leveraged positions lead to flash crashes. Upside. Stablecoins growth, rivaling Visa, enables everyday use from remittances to e-commerce. Long-term. Bullish. Crypto's 8.9 trillion market cap could double with adoption. Locally, clearer regs position Australia as an APAC hub. Globally, AI crypto integrations like Coinbase's protocol automate economies. But do your own research. Volatility means balanced approaches. What does this mean for you? Potential for wealth building, but with safeguards. Exciting, right? But let's build on this with some education. Knowledge is power in crypto. So let's expand your toolkit with breakdowns on blockchain basics, investment strategies, and protection tips. Remember, I'm not a financial advisor. This is for educational purposes only. Consult pros for personal advice. First, Blockchain 101. At its core, blockchain is a distributed ledger, like a shared, uneditable spreadsheet across thousands of computers worldwide. Each block contains transaction data, hashed cryptographically and linked to the previous one, ensuring immutability. Bitcoin pioneered this with proof of work consensus. Miners solve puzzles to validate blocks, securing the network. Ethereum added smart contracts, self-executing code for apps like DeFi. Solana, it uses proof of history for blazing speeds, handling thousands of TPS. Why care? It eliminates intermediaries, reducing costs for global transfers. Imagine sending money to a family overseas without bank fees. Investment insights. Diversification is key. Perhaps allocate across Bitcoin, store value, Ethereum ecosystem, and stables. Stability. Track via tools like portfolios, understand metrics like market cap, 8.9 trillion total, and volume. Historical patterns. Bitcoin halvings every 4 years reduce supply, often sparking bulls. But volatility, Bitcoin's 1% daily moves means risk management. Set stop losses, avoid FOMO buys. Consumer protection deep dive. Scams are rampant. Red flags include unsolicited offers, guaranteed returns, or pressure tactics. Use licensed exchanges. Enable 2FA and multi-sig wallets. Hardware like Ledger stores keys offline, thwarting hacks. In Australia, report to ASIC or ACCC globally. Check chain analysis for threat intel. Tax tips. ATO treats crypto as assets. Track gains for CGT. Deadline October 31st. Resources. Dive into white papers or reputable sites for self-learning. Empower yourself. Understand tokenomics, supply, utility, team. For example, stablecoins peg to fiat for low volume trading. This foundation helps navigate news like quantum threats. Post-quantum algos are evolving. Questions? Comment below. Let's learn together. If today's deep dive has you craving more, for more info or news, updates, head out to the website cryptologic.com.au. It's packed with the latest to keep you ahead. What an epic journey through crypto's highs and lows. From Australia's reg hurdles and adoption regrets to global ETF booms, stablecoin surges and quantum curveballs. Bitcoin at 166,000 Australian dollars isn't just a number. It's proof of resilience in a transforming financial world. I'm Sash from CRYPTOLOGIC, rapping from Melbourne. Grateful for your time. If this fires you up, like, subscribe for daily deep dives and share with mates. Your bold BTC prediction for November? Comment now below. Let's build this community. Stay passionate, informed, and huddle strong. See you in the blockchain.